this video is just a short precursor to the email that is accompanying it, outlining, of course, year-end tax strategies. Taxation, it is on everyone's lips at the moment, isn't it? For getting the best possible advice so that we can minimise the taxation that you are paying to the government. As a result, we have a few, within the brochure, we have a series of simple approach to businesses. Up on the board, we've identified a couple of the main tips that we recommend to our clients year in, year out, but it's always good to have a good reminder. Or if this is your first year in business, you get a feel for exactly what we look for when we're trying to minimise a client's tax exposure. For business, these are the major things that we like to consider. Inventory. Okay? Have you reviewed your inventory? And if you've got items there that you aren't going to sell, write them off. All you're doing by counting them is increasing your tax liability. Prepayments. Are you a small business? Do you have excess cash? Can you pay things like rent or interest in advance? Get the deduction up front. Prepayments up to 12 months in advance can be deductible in the year that is incurred for small business. A small business is generally one with $2 million or turnover or less. Bad debts. Are you carrying debtors that just will not pay you and you know they're not going to pay you? If that is the case, write them off, get rid of them, record them as bad, get the tax deduction. Bonuses. Bonuses to employees that aren't related parties of the entity can actually be accrued in a particular financial year, even if they're not going to be paid in the forthcoming year. As a result, you may have some profit there that your employees have done a good job. You'll pay them a bonus, and however the bonus is not paid till July. If you accrue and report that bonus in June, you will get the tax deduction. Finally, for those mum and dad businesses that have excess profit, they may look at increasing their superannuation contribution. This is an important area as it is a true tax saving. A lot of the information here above is really tax deferral. Okay, we're just moving it from year in, year out, because it may be that in a particular year you will have less tax to pay, and therefore it was advantageous to get the tax deduction in the earlier year. Superannuation is a real tax saving, and that's because the tax rate in superannuation is 15% for most people. However, high income earners do pay a higher rate on their contributions. Within super, we can also look at superannuation reserve strategies, whereby if you feel this year is a bumper of a year and next year will taper off a bit, we can look at increasing your contribution in the month of June, and subsequently getting 2 years worth of super into your return, of getting 2 years worth of superannuation deduction in the 1 year without incurring the excess superannuation contribution. A strategy like that requires a deal of advice and paperwork from us, and we would be happy to help you with that. So overall, they're just some of the things that we look for when performing tax planning in relation to our client. There may be others. If you feel that the need for the requires us to have a look from a tax planning point of view, please feel free to make an appointment with us, and we'll certainly go there, see what measures can be put in place to reduce your tax this financial year. www.spectrumft.com.au will have this interactive video for you. It contains this video and others in relation to matters that we feel are important when running a business. Or otherwise, you can like us on Facebook, follow us on Twitter, connect with us on LinkedIn, or just simply ring and call and have a chat to us about any matters in relation to tax and accounting that you feel we can help you with. Have a great day, and we'll talk again soon. Bye-bye.